Hello everybody. So a quick video today to talk about the state of AI and AI valuations. As I have updated my spreadsheet, now most of the companies I follow in that sector have reported. And what I want to say in a nutshell about the AI valuations, not too crazy. I don't think we are in a bubble. I don't think this is too crazy. I listened to the call yesterday of Nvidia, just like about everybody else, I think. Of course, August is still an awful month. Like, what did the market do today? Nothing happened. In my view, the earnings of Nvidia were superb. They were great. I don't know what the market could have wanted more. I really don't know what the market could have wanted more. I think people are caught in this, what I believe is a mistake, to think that just because the company is a 4.3, let's call it 4.4, a $4.4 trillion market cap, people say, oh, it's so expensive. It's the largest, most expensive company in the world. It can't go up any more than this. And of course, remember when Apple became a $1 trillion company, nobody thought Apple would keep going up, and Apple more than 3x'd since then. And so when I look at the valuation of Nvidia, I kind of hope to trust my numbers. Forward revenue growth, if you look at all of the analysts and listening to the call, by the way, as Nvidia was talking about market share and their expectation for their next gen product, I'm getting the sense from Nvidia that he's thinking we're going to grow with the industry at a 50% clip for years to come. At least that is the feeling that you get when you listen to that call. He was very bullish on the call, in my view, especially when his guidance excluded China. There was no such thing as China on his guidance, and they might be able to go after the Chinese market only by paying, a 15% tax to the U.S. administration. You pay a 15% tax, and all of a sudden you unlock an enormous market. So that growth could be actually much, much, much higher. I think paying 15% in exchange of being able to go to China, I think, is a no-brainer for Nvidia. I hope they do it. They're waiting for guidance on that. The point is, this number is not too far-fetched. This is a company who could grow at 50% for a few years to come. And in that case, you have to look at the valuation in the context of growth. In the context of a company who could double its revenue in a matter of 18 months. What if what in 15 to 16 months, what if we are at 300 billion in revenue? That's the context. And so when I look at valuation, I get an enterprise value over gross profit over revenue growth of a 0.6. This is a little higher than I like. I like to see it under a 0.5, but this is nowhere near nosebleed. And again, I gotta contextualize it. Like Palantir is very, very expensive. Nvidia, considering, if you think Nvidia is as hot as Palantir as far as, a blue chip stock, then Nvidia looks like such a cheaper play. And the rule of 40 is 122. It's absolutely outstanding. Their gross margin are stabilizing. Their gross margin are still in the 70% range. EBITDA margin is 59%. They are a cash printing machine. So it's not that expensive, right? They beat on revenue, they beat on earnings. Now the problem is algos, they get a good news and they sell it off. They were going to sell off Nvidia today, no matter what, in my view. They were going to sell it off no matter what. Revenue is still predicted to grow 60%. They did a $60 billion buyback. I don't like that as much. I would like them to reinvest in the business, although the question is, are they running out of things to invest in? Well, I don't like to see the buyback as much, but I realize it's how traditional Wall Street does it. Don't forget, Apple didn't innovate for 10 years, but the stock still did outstanding because of the buyback. So again, what do I know? I just don't like it. I would rather see them invest in innovation. The problem is that investing in innovation for Nvidia at this point doesn't cost that much money at this point. And so they are printing cash. What are they doing with that cash? I would, of course, much prefer to see them buy Bitcoin, but anyways, they're not doing that. That's okay. If you look at the asset is trading at only 44x next year's EBITDA. So again, considering that the stock is still perhaps growing at 50% a year for at least a couple years, maybe more, and considering that this is the hottest stock in the hottest sector of the market, perhaps along with Palantir, it's not that expensive. And what if you see, like I do, what if you see AI being a decade-long story like I do? Are we going to do 63% growth next year, and then 55%, and then 45%, and then 42%, and then 37%, and then 30%? Like it's this business could grow to much larger proportions. And yes, some people still feel uncomfortable about a $4.4 trillion market cap, but we will see, decatrillion-dollar market cap companies sooner than later. We will have companies that are going to be 1 decatrillion, 2 decatrillion. That's going to come because fiat is going to be debased like crazy, and that's going to continue, right? That's why I call the channel Beat the Denominator. So anyways, this is a long-winded way to tell you that I don't think Nvidia is that expensive actually. At a 0.6, even if it's $180, I really don't think it's that expensive. Moving on to the other stocks in the sector, and this is where it really comes to life that Nvidia is not that expensive. If you look at AMD, I keep inputting the numbers that I see, and I know people are very excited about MI300X, and they're very excited about inference, but it's more expensive. Like AMD, in my metric, on a growth-adjusted basis, it is more expensive. It's trading at 0.85. The rule of 40 is there, good for AMD, but barely there. So when I see AMD, I tell myself, okay, well, it's more expensive. Like it's a good third more expensive than Nvidia, and I think people make a quick analysis with AMD. They say they're a smaller player, so that means they have to catch up and they have to make more money. But oftentimes that's not how it works in business. Oftentimes winners take most, and Nvidia appears to be the winners that is taking most. As much as people love Lisa Su, and I think Lisa Su is a great CEO. She seems very fun. I've listened to a lot of her talks, but loving the CEO is not really helping in this case. It's more expensive. So I would rather own the leader in the field than I own Nvidia. I don't own AMD. I own Nvidia. Why do I? And it's a small position. Unfortunately, I sold it much earlier price. I thought I was real smart. I thought I was super smart. I was like, okay, that was an easy, I think it was 2x or 3x. Well, you left all of the money on the table. I did that, but I kept a little bit, and I'm going to keep it for a very long time now. And Nvidia, I think, is the better buy between Nvidia and AMD. Now, a stock that I'm actively adding to in my portfolio and that I like very much is SMCI. If AI is going to be a thing for the next 10 years, SMCI is also going to be the thing for the next 10 years, because most of the new chips that are manufactured by Taiwan Semi for Nvidia, but we're going to say manufactured by Nvidia or sold by Nvidia, most of these chips need liquid cooling. And SMCI, along with Dell, they're both the leaders in liquid cooling. But Dell, the problem is you have to buy the legacy business that grows super slow, in addition to buying the liquid cooling. SMCI, you get a pure play, green computing, liquid cooling. And by green computing, we mean, using less energy. And using less energy is all about the AI game right now. You got to make chips that use less energy because we are energy constrained first and foremost. And so these chips need to get updated. And data centers are going to need to go liquid cooled. And SMCI is the only pure play exposure that I could find to the sector. I like SMCI very much. I know that a lot of people don't like the CEO. A lot of people don't like the Taiwan ties. But you know what? If you don't like ties to Taiwan, if you don't like Taiwanese CEOs, you should probably not be in the AI hardware sector, because you can't do without that. So I like SMCI. I think SMCI is fine. The market is still saying, oh, accounting issues. The truth is, how many statements does a company have to make to show that there were no accounting issues? I think SMCI is done making these statements, and you will have the market to keep dismissing them because of these whole madness that we went through the last year. And SMCI was a top performing stock. If you look over the long run, the performance has been quite good. Micron is of course it's memory, right? It's RAM, it's memory on a chip. They're going to experience a lot of demand because a lot of these GPUs actually need memory. Micron is the leader of instant memory for computing. I need to study Micron. It's on my to-do list. Micron looks very cheap at a 0.24. Rule of 40 is a 92. It's much more established than SMCI. It's much more established than a lot of the newer AI plays. The problem is that Micron has often had a bad reputation of being a very cyclical company. Boom and bust in memory is a thing. In hardware, memory for compute is a thing. There's been boom and bust. Are we out of this boom and bust cycle? I don't know. I need to study it. Unfortunately, I don't really have the time. That's the problem. Time is the most in-demand resource. Looking at Taiwan Semi. So Taiwan Semi, for me, I've always eliminated for two reasons. One of them is geopolitical risk, or at least perceptions by the market of geopolitical risks. Like, I'm not going to get into whether there's actual risks or not, but the market perceives it, and so it creates overhang whenever there's, China, USA, I don't know, talks or whatever, or tensions or whatever. And so that's my big problem. And also, it's too slow growth for me. And it might feel a little snobbish for you to hear me that 28% next 12-month revenue growth is slow growth. And you're right, it's almost great. But, and AMD, by the way, AMD is not only more expensive, but AMD grows only 21% next 12 months. So AMD, I would dismiss also on the basis of growth. And I guess this is illustrated, of course, Nvidia growing 60% next 12 months. That's twice as high as TSM. You got to compare to the growth rates in your field, in your sector. And the AI hardware sector, 20-ish% growth in the AI hardware sector is not good. You want more. At least I want more, because I'm greedy for growth. I'm a growth snob. And of course, a company that has been growing like a weed and that has been treating us, all of us who got into that stock early, and unfortunately I didn't buy enough, right? But it's Nebius. And Nebius, to me, it's run fast. I'm not comfortable with it being at 72, but it's $72 a share, but it's mostly psychological, right? Because we remember this stock being in the $30, and it was not long ago at all. This stock has not been around for even 52 weeks. It's been around less than a year. But you can see even at $72, the stock still looks fairly cheap. Not as cheap as it once was, but you get a 0.35 on enterprise value over gross profit over revenue growth. Rule of 40 is almost 200. Predicted to go at 354%. And when I inputted that number, I checked. This is the actual number. This company is growing so fast. Now, of course, it's a money-losing company right now, and so they're spending cash, they're expanding so much, so much money on that capex. But at some point, this should subside, and at some point, this should be positive. But that's the only downside about Nebius, of course. But I can't expect that for a new issue and a new company, especially in a capex-intensive sector. I prefer Nebius over a lot of plays. Like, I prefer it over CoreWeave. I prefer it over Iron, and that's because of their software stack. That's also because of the value of their venture equity capital investments, right? They own ClickHouse, 28% of ClickHouse they own. They don't own the whole thing, but that could be a very valuable company that we have to subtract from the 16 billion enterprise value. They own other plays. So Nebius, very interesting company. Kind of gives you a big tech feel. Could be like a mini big tech company at some point. The more you study Nebius, the more you get that feeling. At least that's the feeling I get. And last stock is Total Site Solution, TSSI. I analyzed it recently for the Patreon, so I would think I understand this stock much better now. So I did a full analysis. That was a Patreon request. Of course, it is the cheapest. Enterprise value over gross profit or revenue growth is a 0.09. It's growing super fast, 150%. It's EBITDA margin profitable. It's got a rule of 40 over 100. And this is wonderful until you see the problem is, and by the way, I'm guessing it's Dell, the main customer, but I'm no fool. The headquarters of TSSI is like right next door to the headquarters of Dell. But anyways, the problem is you're almost entirely reliant on a single customer. And so what happens is that if that customer decides to take on, a AI site outfitting, what happens, and procurement, right? They do procurement. Total Site Solution makes most of this money for AI hardware procurement. What happens if Dell says, okay, I'm going to do it in-house now, or, oh, I'm going to use your competitor? This is what I call a binary stock. TSSI is what I call a binary stock. Is if they lose their main customer, that stock could crash. Like, it's not out of a question a stock like this could crash 80% on a news like them losing the main customer. So it's risky. But again, you're paying a cheap price because it's a very risky business proposition. So you're paying a cheap price. So the company is trading at less than 1 forward revenue, but that's because they haven't diversified their customer. If I were them, I would spend all of my time trying to diversify customers and get someone else, right? But anyways, maybe that's probably what they're doing. But anyways, so right now, in conclusion, Nvidia, I don't find it too crazy. I'm owning it. I'm owning it. I'm definitely not selling it. SMCI is kind of my favorite play in the sector. I'm adding to SMCI and Nibbius. Unfortunately, it's run too much. I'm not adding Nibbius at these levels, but I wish I had more. And all of the other ones I don't have for XYZ reason, as I just outlined. So anyways, this was not investment advice, not financial advice. This is only entertainment. Hoping you were entertained. Please like, please subscribe, follow me on Patreon, follow me on X. Thank you for watching, and have a wonderful, wonderful day.